I'm back, everybody. I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner in pain, Mr. Nick Hodge, who's an investor and the publisher of Daily Profit Cycle. This is the 309th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets, we're going to talk gold, we're going to talk copper, silver, rates, overall indices. We're going to talk about a lot of things, but first and foremost, as always, Senor Hodge, great work last week with Mr. Chris Curl. Great to have you back. I know you're somewhat in pain, so I appreciate you making it with me this week. How are you?
I'm in pain like the S&P and tech stocks, Gerardo. Lots of pain out there. No, I had a tennis elbow surgery, so a couple of stitches on the top and bottom side, a little bit of pain, but gritting my teeth in and getting through it, as it were. Glad to have you back, and hopefully you'll lead the way because, like you say, I'm enduring a little bit of stuff over here, but I'll chime in where and when needed.
No, look, let's it'll likely be a briefer one than usual because for once in this bizarro world of ours, it's been a relatively normal week. I mean, aside from like Tesla Cybertrucks being vandalized and like Molotov cocktail bombings in Vegas of Tesla vehicles, and our government calling that acts of terrorism. Aside from that, it's been so crazy the past like 5 or 6 years that this past week has felt relatively normal, man. I'm happy to be able to just talk markets and talk record gold prices and get into all of that. But you feeling the same about the week? Kind of less bizarro than usual, right?
I'm with you. Yeah. We've been saying that it's been a little bit of a broken record stuff. I just think you're getting some flow through here of the things that were already brewing. So nothing too unexpected. Sort of knew the Fed wasn't going to do anything. And the market's doing what the market's doing. Continue to digest the uncertainty, which is the word we continue to hear. And so uncertainty is the new normal. VIX remains elevated, and the havens are showing why they're havens, as you said. Gold is at a record, so seeing it pretty clearly. I think. What do you want to talk about?
No, well, I would talk technicals. I mean, I would talk technicals, but the technicals are gold's going higher, right? I mean, there's no overhead resistance. We blew through 2,800, then we blew through 2,900, and here we are sitting at 3,050. They've tried to push the gold price back a little bit the last couple of days, and not many people are selling, right? I mean, we're sitting there pretty robustly at the 3,050 level, and this despite a dollar index that looked like it was going to break down towards the 100 level, but it's right back up, nibbling at the 104 level. With all the uncertainty, and now I'll talk Jerome in a second because there was a Fed meeting this week that they did exactly what we thought they were going to do. But your thoughts on gold, and do you see technical support that's been developed now that we've broken again out to all new all-time highs?
I think both gold and silver are bullish. I think that not only are the technicals lining up, nothing more bullish technically than an all-time high, right? Like you said, no overhead resistance. So technically gold and silver look pretty good. And then you add in the other things. You said dollar back up to 104, but that's really a bear market bounce. The trajectory is still down and to the right. I would expect it, closer to 103 when we talk next week than 105, for example. Rates continue to be soft. After Jerome spoke yesterday, the 2-year yield went below 4%. Yep. It had a 3.9 handle on it today. 10-year yield has been soft because it's pricing in a slowdown in growth. We've talked about that in recent episodes. The Atlanta Fed saying that Q1 GDP could be negative 2 or 3%. No one really knows because, again, we don't know how ferocious the Doge is going to bite. We don't know what's going to hold up in court. There's back and forth with the judges and the DOE and courts saying you can't just fire these people. So, that's what I said. Uncertainty is the new normal. And I'm sort of fine with that because the beneficiary has been gold and not just gold, but I think you mentioned copper at the top.
Absolutely.
That's back over $5. And the stocks are starting to catch a bid as well. And so, One thing I wanted to say is that the signals are all over the place, right?
Yep.
When
Yep.
we talk about inflation and it was 3% in January and then 2.8% in February, it'll likely be softer again when the next number comes out. If you look at a chart of oil, for example, it was going down until like the first week of March. It only started going back up. Um, the soft commodities are getting a bit cheaper as well, and so it's not one of these markets where you can paint with a broad brush and say all commodities are going this way or that way or this correlation is holding up, because it's not. This market is all over the place, and it's really you got to look at individual commodities and individual signals. Like with copper specifically, um, you've got these tariff talks. You had Trump slip up during his talk to Congress a couple of weeks ago and said that, there's a 25% tariff on copper that was non-existent yet. He has kicked off this Commerce Department investigation, Section 232, which some of folks will remember, like we had that for uranium 5 years ago,
Yeah.
and that ended up sort of kicking off a bull market, right? And I think similar things could happen here with copper. So it's really case by case, commodity by commodity. And then things are a little bit squirrely out there. But at the end of the day, um, gold at above 3,000 is, I know for me at least, on both the speculative and the safer portfolios, keeping things very buoyant, right?
No, and look, I think I think, well, one, let's do what we usually do, pat ourselves on the back a little bit, because you have to promote a little bit, right? Always be selling. So I'll be very upfront and forthright. On the commodity side, we've gotten everything correct with two exceptions. Lithium has taken longer to turn back up than I expected, and uranium is taking longer to break out than I expected. Both will happen, be absolutely clear. And so I highlight that to say that with copper and with gold, we position ourselves and subscribers, readers, family, and friends absolutely beautifully. Like, I am so thrilled when I look at, all my private placements and my certificates and shares that I own in the open market. I look at the positions. I couldn't be more excited about the rest of the year. And the rubber's hitting the road for a lot of those companies that we'll talk about in the premium portion of this podcast later on. But a lot of quality exploration work that I think is going to lead to a lot of very, very significant discoveries here in 2025. Those discoveries, the discoveries that already have been made, are getting rewarded in the market, right? We're seeing, we talked about a couple of companies off air. Again, I'll mention them later, but companies that are onto multi-million ounce gold assets in stable jurisdictions are absolutely catching a bid, right? And that's a function of knowing what you own. We had a company, Perpetua Resources, that pulled back when their increased capex about a month or so ago. It scared a lot of people, frankly. And the stock went down some 30%, had a ton of subscribers write in worried. And I explained, look, inflation is real. I don't care what Jerome said this week. Inflation isn't transitory. We fell for the okie doke the last time. We're not falling for it this time, Jerome. But what that tells me is that if you're able to have scale and discoveries of significance, you are afforded the luxury of an increased inflation high capex, like Perpetua Resources is. Not a coincidence that stock has performed beautifully, and it's a couple of bucks away from new all-time highs, right? I think people are starting to understand that for every $100 that gold goes up, that net present value of Perpetua's asset is going up proportionately, completely offsetting the increased capex. So I say all that to say, know what you own, sit tight, position accordingly. If you're looking for sector spokes that are weak, that will turn, that have bargains, uranium and lithium sectors are a gift right now. They're a gift. You have quality, top tier, permitted, soon to be producers in North America, in the US, with the government's blessing, sitting there trading at half of where they were trading 6 to 9 months ago. That's an opportunity. Ditto for the lithium names. Yes, they're starting to catch a bid, the better names anyhow, but those are still coming off super depressed levels. So the time to position in copper and gold was, 2 years ago, a year ago, 6 months ago. Unless you find something new and you find something early that can be advanced rather quickly, you're probably paying a premium for new gold positions. Now, they do exist for new copper positions as well. They absolutely exist. But I'd much rather have bought some company that I own a ton of at 25 cents than I'd rather buy it at $1 today, right? And despite that, there's companies that I think are that same company will be a bargain a year from now at $1. And so it's all about positioning. If you're looking to position early and you're looking to be wrong for a little bit, but then be very right, lithium and uranium are offering bargains left and right.
That's sort of one of the things I was intending to mean about commodities, right? With copper up above 5, but like you say, uranium not catching a bid yet, still down around $63 a pound. They're sort of all over the place. Your point's well taken about capital coming into the gold space. So first on the equities, it looks like the GDX and the GDXJ are breaking out, not want to break out, but are breaking out. Starting with the close last Friday. So they look pretty darn good. The other thing is I see a lot of capital coming into the sector in multiple ways. So I see the inflows into the gold ETFs, of course, which reports come out every week and talk about the previous week's inflows, previous months, previous years. Capital allocators, generalist allocators, portfolio managers are starting to allocate to gold. That's a good thing. Obviously, we're talking about you don't need a lot of capital to come into the space to make it move in a very big way. The other thing I see is equity financing, equity funding being available. I've seen multiple deals, and I won't name them all, but announcing we're raising 20, 30, 40 million dollars. We're upsizing to 45, 50, 60 million dollars. And I've seen this in multiple companies over the past week. Tens and tens of millions of dollars coming in to advance development assets, Rupert Resources, Probe Metals. I mean, the money is being raised. Power Metallic, I think, just raised 40 or $45 million. And so you see that the purse strings are starting to open up. And I think that's what you mean about being in the sector early, right? There's contrarians and there's victims. And we say that the early gains come early on in the sector. It's certainly nice to have our positions, the bulk of our positions established now, while I don't want to say the late money, but certainly ahead of the next round of money. You want to be in as early as possible, right? And so it's good to see the sector heat up. And at the same time, I still think there's a lot of upside left.
And look, discoveries are being rewarded. You talked about Power Metallic, right? This was a company that a year or so ago, I remember having Terry Lynch on Resource Stock Digest. I interviewed him and we were talking about being contrarians, and we were talking about how the market hadn't responded yet to the discovery because capital was shy. Capital was on the sidelines. Capital didn't see a breakout yet. They just raised that $45 million at a significant premium, with the stock trading right now at $1.66. Again, I mean, this is, that's a 12-fold gain in less than a year. And now they're being able to secure that kind of capital. This was a junior that a year ago was looking right and looking left and then wondering, which bill should I pay to make sure that we're being efficient with the capital that we have, because it was limited for the entire sector. And I couldn't agree with you more. A lot of the money that was on the sidelines is starting to come off the sidelines in a pretty aggressive way. That tells me M&A is likely on the way, especially in the gold and in the copper space. The copper trade is such a beautiful one, because at the same time that I think it's going to get government support, I agree with you that especially here in the US, this administration is likely to designate it a critical metal, and there's going to be something similar to what they did with uranium. But even if that doesn't happen, the supply demand fundamentals are so good. The structural deficits are here. They're coming here in the second half of this year. That's why it's running, and they're going to last for many, many, many years. So any kind of support is like the cherry on top. But frankly, if all we do is trade off fundamentals, copper is going to go on a hell of a run. Think $5 is fun? Wait till it's $7 and $8 and people are scrambling to secure any supply. They won't care what they're paying. They're just going to want to make sure they have enough supply for the next 10 years, because it's the best heat conductor, because you need it for everything from data centers to infrastructure, you name it. So I couldn't be more excited about the positioning. And again, I want to really emphasize to everyone, get positioned in the lithium and uranium sectors. Pick the better names. If you're shy on the explorers, you all know me. I'm high risk, high reward. I like finding the $5 million companies and watching them go to 50 million, then 100 million. And, if we're lucky, a billion or two. That's not for everybody. That comes with 50 and 60% drawdowns. And it also comes with having to sit on my hands sometimes and looking at it, wondering why nobody else gets it yet. And when we're right, it changes lives, right? But that is not everybody's cup of tea. Everybody can't afford to see a portfolio down 50, 60% for months on end and sleep well at night. And I completely understand that, because I have friends that, will text me, what about Trump's policies? Is he going to mess everything up? And I'm going, no. We were actually positioned perfectly for a Trump presidency. And the way that we're positioned is based on a lot more than just, politics. And so lithium and uranium, Contrarian's dream right now. Get those positions. If you don't like the explorers like I do, go find some of the bigger liquid names that are producing, that have operations that, you can get out of if you need to get out of. But we're probably near a bottom in this cycle for lithium and uranium.
Yeah, I think I mentioned Denison 2 weeks ago when we were talking. I bought some more Denison in March. They had a really good update out 2 weeks ago. Basically, their financials, but more about, coming permitting for their Phoenix project, which they'll have final federal hearings on in October and December. They're sitting on $100 million in cash. They're sitting on 2 million pounds of uranium. There's a lot to like out there in those mid-tier producing uranium companies. And again, you say we're perfectly positioned for Trump. It wasn't intentional. It wasn't like me and you got together and said, we got to buy North American resource equities because Trump is coming into office. No, it's been the writing on the wall for a decade. And again, broken record, but the production and refinement and processing of metals was always going to move from east to west. It was unsustainable otherwise. Trump has just been the catalyst, and that's fine with me. And it's sort of funny to watch people, wring their hands or otherwise throw their arms up about the way he's doing things. And I've told you, I just don't care. Who's in office? This stuff was going to happen no matter what. The time frame might have been shifted around a little bit, but certainly glad to see it playing out now, and the portfolio is reflecting that gladness.
And look, we can't talk commodities and we can't talk the U.S. without talking China, right? And I've said multiple times on this podcast, we've explained to you all that as the single largest consumer of commodities and the single largest exporter of a lot of the critical metals that we're going to need to build out our future, it's a consumer economy that's struggling right now in China. And there's going to be, and I think Copper's, kind of front running this, there's going to be massive amounts of additional stimulus coming out of China over the next several weeks and months that, again, Copper doesn't need the help, but it sure isn't going to hurt. It's absolutely going to put a cherry on top. And so, again, we have a gold bull market. We have a silver bull market. We have a copper bull market. We'll have a uranium bull market, and there will be a resumption of the lithium bull market. There's a lot of ways to make money right now, folks. You can do it with an E-Trade account. You can do it with the TD Ameritrade account, which, of course, are online brokerages where you could buy the equities on your own. You can reach out to us, and we'll put you in touch with brokers that, work specifically to advise you and to, guide positions and buy and sell for you if you don't want the headache of doing it for yourself. And then there's services like the ones that we offer, right? We have monthly newsletters. We have newsletters for retail investors. We have newsletters for accredited investors. And, I got to bring up private placements again, because we talked about it every time that, we've been on this podcast. But the reason we keep talking about it is because they keep doing so damn well. And people keep making life-changing gains with a lot of these placements. And again, we're at the point where the people are getting double, triple their money in 6 months, and the good stuff hasn't even happened yet, right? Like a drilling for a lot of these companies, the prices are going up on anticipation of drilling and discoveries. And so when those actually happen, it really gets fun then. But it goes back to positioning, and it goes back to vetting quality deals, getting those deals early, being able to influence terms and being able to influence to some extent how the story gets out, and making sure that it's a quality story that's structured properly. That's Nick and my job, right? We do that for you. And so I can't preach enough. If you're an accredited investor, if you're speculating with more than $10,000 in this space, go subscribe to Private Placement Intel while it still has some slots available, because we just You just wrote up another a deal here this past week. This follows two other deals that we had rolled out the last couple of weeks and months that have already done phenomenally well. And this comes on the back of a 2024 that saw, out of 10 deals, set all of them except for one were very, very green. 3 are still private, soon to be listed and go public. And I think those are going to work out very, very well for us as well. So the track record's there, folks. The deal flow is fantastic. Luckily, we've been able to establish a network that we're very thankful for over many, many, many years. And, in an odd kind of way, you end up working harder in this bull market because of the amount of deals, but getting quality deals, and I don't know if this is the case for you, but finding quality deals has been easier for me lately because they're coming to us. And before, it would be us kind of having to go to them, right? We're being able to get better seats in better tables, and that benefits, friends, family, and subscribers, and that puts a smile on my face.
Yeah, that comes with having 15 years in the space, being able to write larger checks, the group, the private placement Intel group writing collectively larger checks in these past three deals. And so the companies invite you to the table sooner, and you sometimes get to flex your muscles on the terms you'd like. So a couple of things there. Earlier, you were talking about, being in deals early and what that affords you. Obviously, getting in lower. But then I was thinking about warrants. So you've talked a lot about Hannon Metals. We went to Peru last fall. This Monday, they put out a press release that they're calling their warrants, or they're accelerating their warrants. Those warrants were priced at 35 cents as part of a May 2023 financing, if I recall correctly.
You got it.
And if they traded above a certain price for 20 days, then the company can call the warrants. It has been a fair amount of time since I've had warrants called, right? Since warrants were in the money and the company share prices were high enough to be able to call those warrants. And I had a buddy call me because he's in Hannon and he didn't quite understand. And he thought they were taking the warrants away. He was like, "What are they?" He said, "Are they Indian giving?" That's what he said.
Bastards.
and I said, "No, they're just forcing the expiry. You just gotta exercise them sooner." And so, woe is me, Gerardo. You're telling me I got to pay 35 cents for shares that are currently trading above $1. So I've got to make 2 to 3 times my money just by pressing a button. What a tough spot to be in. And so I started looking at other warrants, and not only we have several private placements. You just mentioned 7 out of 10 in 2024, but we've got several warrants that are sitting in the money now that we could exercise. We've got several positions that are up significantly from warrants that we did exercise. And then we continue to add warrants to the pile with these 3 new deals that we've done in 2025. Every single one of those deals, the first 2 we did came with a warrant. In the one company, which is a gold IPO, was the first warrants they've ever issued. And then in the most recent deal that I wrote up this week, which is a copper gold mine adjacent to the largest open pit copper mine in Canada, and negotiated a full warrant in that one. They were only going to do a half warrant. And so these warrants are starting to be in the money, and there's other superlatives with private placements, but that's the one I've noticed recently, is that now we can just exercise warrants and make even more money. So by all means, if you're able to do these private placements, or if you've been curious and want to learn more, then check out that webinar. It's the one we did in the second week of February, but it's as relevant as ever. And the last of the 3 deals that we said we would have for you is open now, and we'll be closing shortly. So we've got a resource in the commodity bull market here, and these are high quality companies that we are allocating capital to ride the next couple of months and years as we see higher prices materializing.
And a lot more deals coming, folks. I mean, we have literally a list of companies that we're in touch with where, we're negotiating terms. We're talking strategically when to go ahead and run a financing, what that money is going to be used for, how to limit dilution, how to keep the share structure intact. And you mentioned Hannon and calling those warrants being, woe is me, right? I got to take my $35 shares and pay 35 cents for them. The leverage is insane. We're up, 4-fold from the 25 cent financing on the shares. We're up 3-fold on the warrants. And the strategy, it's a brilliant move by Michael Hudson and the team at Hannon. And usually we say this for the premium portion of the podcast, but we're going to go ahead and talk about it here because I thought the example you used was a good one. So why call those warrants? Because it's going to bring in over $1 million. What does that allow the company to do? Well, the company's sitting on over $1 million right now. You bring in another $1 million, you had your drilling permit. It allows Hannon to go ahead and fund the company exclusively without issuing another round of shares with potentially another half warrant. And so it provides early investors like ourselves the opportunity to, yes, take dollar shares and buy them for 35 cents. But that money goes to the treasury. That money is going to allow Hannon to get out there and start drilling next month is the plan on 3 potentially company making projects. And so any funds, any groups that were thinking they were going to go ahead and, play with the price or bring the price down in anticipation of a financing to top off the treasury and allow for the drilling of those projects, they got to buy it in the open market now. And that's how you structure a company. And that's how you structure strategically the financing and funding of a drill program. Listen, if we hit in April, and we start getting assays, by the end of May, the next set of warrants that will be called are the 50-cent warrants, and our stock is likely going to be at $2 or $3 by then, right? That happens very, very quickly in this space, folks, when you structure a company properly, and then you have to deliver the goods. So far, so good. Hannon had some more news this week. I don't got to rehash it here, but basically they have mountains full of copper and mountains full of gold, and we don't know if there's more gold or more copper. We know there's a hell of a lot of both, and it's all over the place across multiple projects. So happy shareholder, I wanted to just dig a little bit and give an example of the thinking that goes on with companies and with large shareholders like us. When they ask, hey, Gerardo, what do you guys think about, potentially calling these warrants and just making it to where it's us, the insiders and management, and people with large positions to fund the first leg of the drilling program. I said, yeah, absolutely. By all means, do it. I appreciate the opportunity, and let's get to drilling and let's get to making some discoveries, which I anticipate we will in the next coming months.
That's it. I have some of those 50-cent warrants. I believe they're already callable. I think the level was 75 cents. The shares had to be above. They're, like we said, trading at $1. So here we go. I think you said that well, and that's how you do it.
Drill, baby, drill. Discovery season is coming, not just for Hannon, but for several companies. So I think that's a good place to kind of leave, unless you got anything else that you want to touch on. I know we have a lot of stock talk to talk here on the premium portion of the podcast. A lot of companies that are moving. One that involves Mr. Hudson that is looking like a takeout target to me, the way that it's trading, sitting there at new all-time highs. But and one that we've done very well with Junior Resource Monthly. So anything else that you want to get off your chest, Nick?
I don't know if we want to do the Bizarro Banter. I don't know if we've done that in a couple of weeks. So up to you.
Yeah, let's get it.
Which one do you want? I got a couple of topics there. You've got Tesla terrorism. I got this thing local at Meade High School that I've talked about before, or I can tell you about Enshittification. Choose one.
Let me start with Tesla terrorism, and then you can tell me about what I think you said was Enshittification.
Yeah.
Go me. I didn't mess it up. So is it terrorism? Is it not? Let me be clear about my position. I'm not trying to make light of this, right? Like if you're keying anyone's vehicle because you don't like their political affiliation, you're an idiot, man. Like you're ruining your life. Folks, people don't care about you. They don't care about me. They don't care if you're Republican or Democrat, right? But people are willing to do it. And now people are being charged. And that's the least serious of the incidents. I don't want to downplay people throwing Molotov cocktails at Tesla dealerships, right? But is it terrorism? Is that domestic terrorism? Are we just going to now start labeling everything that the administration doesn't like as terrorism? I mean, I don't know that, throwing a Molotov cocktail at anything is terrorism. It's definitely a crime. We definitely have laws on the books for that. Those people should absolutely be, dealt with legally, and then there should be due process because we believe in the rule of law in this country. But terrorism? I don't know. Thoughts on that, Nick?
Not too many. I would just say that it's the inverse of sort of, Black Lives Matter or something like that, where, 4 years ago they were terrorists, and now the inverse is true because a different group is in power and has control. So Those would be my thoughts. I'm not really involved on either side of those things, and um, enjoy watching the tribalism. But no, I mean it's entirely political and um, pretty transparent why they label things as such, and why people do certain things, right? So I don't have much more to add on it other than that. It's thinly veiled, and it's a waste of time as far as I'm concerned. Wringing your hands about those things, or wanting to be concerned with those things. So I don't know. It seems like the group who is throwing these Molotov cocktails, or they're damaging the Teslas, is the same group that wanted electric vehicles 5 years ago. And so I don't know,
I
man.
was just gonna say
I'm just Nick here in Spokane, man.
yeah, I was just gonna say, I own a Model S Tesla, right? And I've had this vehicle for 4 going on 5 years now. I love the car. It's a fantastic car. It's such a metaphor or an analog for where we are in this country. When I first bought the car, I remember I had friends, car guys, that like, that's not a man's car. Get a real car, you little snowflake car. And you were viewed as like this crazy lefty, soft, like electric vehicle, pampered baby, right? It was associated, at least in the media and on Twitter and by people on the right at the time,
Sure.
right? It was like, oh, you little snowflake, you get yourself a real vehicle, get yourself a real truck, boy. And like now, here we are, fast forward 4 or 5 years later, and like it's a fucking Nazi car. I'm like, what the fuck are we doing as a country, folks? Everything doesn't have to be, any this or that. It could just be that someone likes the car, or likes the autopilot, or likes the technology of it, like I do. It doesn't necessarily mean I was a lefty back then, and it sure the hell doesn't mean I'm a Nazi now, right? There is a world where somebody just likes a car, folks. There is a world where you could disagree or agree with the political positions of the people that manufacture those vehicles, but it is so tribal, and it's such a like just so symbolic of the time that we live in, how sensitive the people that supposedly aren't sensitive can be.
It's crazy, man. On a related note, but not as political, electric vehicle sales are doing okay. And talking
Yeah.
about Tesla sort of jogged my memory that I had a little excerpt in the foundational profits monthly issue, and a friend of ours also sent along a little article about how EV sales are doing okay. So let me just see what it says here. Global EV sales, this is as of this month, March. Global
Hmm.
EV sales up 30% this year already. Even here in the US, EV sales are up 28% compared to 2024, despite particularly unfriendly EV headwinds, i.e., the cancellation of tax credits, etc. And the same thing holds true in Europe and China. So, look, you were talking about how it's a contrarian time to buy lithium. These electric cars aren't going anywhere. The sales are continuing to increase. And it's no longer the Tesla show is
Yep.
what this article that I was just quoting from was saying, like the Hyundais of the world, the Kias of the world, even Mercedes is out, I think, right now with their latest and cheapest version of an electric vehicle. Um, Look, it's continuing to happen out there. So whether or not Teslas are getting Molotov cocktails thrown at them, the electric vehicles are still being sold. And that lithium market isn't going to remain depressed forever. So just be a little bit less political about your drivetrain of choice.
That's it. That's it. We have to. You have to enlighten me on what enshittification is, because it sounds like what happens to people when they take mushrooms and go on a bad trip.
So enshittification, I came across this term recently, and I just wanted to pass it along. So I'll have to read from Wikipedia because I haven't memorized it, but you sort of know what enshittification is, especially in terms of like startups, and especially technology startups where a product comes out all hot and polished, and it's the shiny new thing and everybody wants it. And then it sort of degrades or gets more shitty over time. That's enshittification. So there was a writer, his name is Cory Doctorow, who coined this term in November 2022, and it's been picking up steam. Now has its own Wikipedia page, and the term is being adopted into the zeitgeist. This writer, Cory, specifically talks about, again, tech platforms like Airbnb, and how 5, 10 years ago, Airbnb was simple to use. It was easy. It was cheap. You avoided hotel fees, and it was a good option. And now you got to clean the bathroom, and there's cleaning fees, and it may or may not be cheaper than a hotel, and you know how it goes. So
Yeah.
just the enshittification of things, and he speaks specifically about shareholder returns and private equity. So he's talking about, when these things are venture capital driven, yes, there's investors, but they aren't beholden to the bottom line like a public company is, and how once these
Right.
things go public, they have to start making money, right? Because they're beholden to the shareholders and not the users. And so therefore the experience or the platform or the product degrades over time. And that is the enshittification of something, Gerardo. So I thought that was appropriate for Bizarro World podcast, and I like the term, obviously, and have seen this in other aspects of life, right? Where things start off good and then degrade over time. So that's the enshittification. I thought I would just bring it up.
I appreciate the opposite. You want to know what the opposite of enshittification is?
What is the opposite?
Selma Hayek.
She gets better with time.
I don't know how, but good and sweet, baby Jesus. That's all I got. What are you watching this week, Nick?
Well, we're gonna have to talk. We're gonna do the premium picks.
Yep, absolutely. We're gonna pivot on over to the premium portion of the podcast, but I will let you all know that I'm definitely keeping an eye on the dollar and gold this week. I'm curious to see if the gold price accelerates and picks up steam, and I'm really curious to see if silver finally has that breakout above 35. It flirted with it a couple of days ago. It's back under 34 right now, but I am watching the dollar index, and I'm definitely watching gold and silver this week.
Yeah. I don't think you're out of the woods in terms of this broad market sell-off. I think that you had a bounce this week after Jerome spoke. But I think tomorrow is the options expiration for March, and
Yep.
I think you got a little bit more softness and volatility ahead in this market. So that's what I'm watching. And with that, we'll go to the premium portfolio picks.
This was the 309th episode of our weekly therapy session, a painful one this week for Mr. Hodge, called Investing in Bizarro World. Have a great week over there, everybody. Don't get arrested and go do 520 years for somebody else's political beliefs.
See ya.